Hello guys, welcome to a Train Parrot. On the 4-hour and on the daily time frame, I stated very clearly yesterday in this particular video over 150k BTC Fibonacci Hopium show that based on the current situation on Friday and on the rejection that we saw in here from the fair value gap, that I had a bias towards an ABC correction on the 4-hour, targeting potentially somewhere around 65k. If you watch the video, you're going to understand where I was coming from. Now we are on the weekend and we need to observe the additional elements that are piling up while the price is going sideways. We're talking about the closing price, the effective one that we had on Friday, the liquidity pools that are being increased over the weekend. We're just on Saturday. Let's see as well what happens tomorrow. Expected as usual is weekends with low volume, but over the weekend, if we were playing chess game, is where we need to look our opponent. Where are they placing the horse, the queen and the king? What is the sort of damage that they can cause? Evaluate the situation, the odds that they might make certain move, and that's what we are gonna do during the video today. We're going to see how they are progressing, positioning those pieces for the actual hit that typically occurs on Monday, if not in the first 2 to 3 days of the week. If you stick until the very end of the video, tonight I'm going to reveal an indicator that is not my creation, is not paid, is not popular, and it has been able to predict every single top and every single bottom of each individual cycle in the past. It's a very interesting indicator. They only take donations in crypto. That's all they make. And I remember covering this indicator only once. I feature it in my channel. And at the end of the video, you're not just going to become aware of this beauty, but also you're gonna know at what number we are. The indicator goes from 0 to 100 and it's gonna tell us how far we are from the top. Guys, if you like this type of content, make sure that you're subscribed to the channel. Hit the notification bell so you get notified every time I put one of these videos. In yesterday's video, once again, I dodged the bullet. I said if we get to 500 likes, I'm gonna sing in the channel. Can't take my eyes off you, dedicated to the megaphone pattern with all my love. I can see we still don't get to 500 likes, so I'm not gonna sing the song until we get to those 500 likes. If this video, the one you're watching, gets to 500 likes, maybe I can do it. Now, I will do it, of course, if we get to 500 likes. And guys, tomorrow, Sunday, the update is not going to be on the Trading Parrot account on YouTube. So make sure you're subscribed to Coin Bureau Trading. I'm collaborating with them. My last video went out 2 days ago. Make sure that you're following me there. Any comment that you do there, liking those videos as well, is really helping and supporting me to continue the collaboration with Coin Bureau, which is pretty much the largest crypto channel in all crypto, in all YouTube. And I continue to look at the Big Whale Explorer, which is using data from CryptoQuant to understand how many deposits versus withdrawals there are from large whales. And typically, every time that I get notifications, also from CryptoQuant, spotting these bastards depositing 1.7 billion, the following days, I go to Big Whale Explorer and typically you see a spike like this in red going into distribution. So I really don't know if they reverted those transactions and maybe they flagged them as invalid because maybe they were internal transactions in the exchange or ETFs transactions that don't count. And since the Big Whale Explorer uses CryptoQuant, but it tracks an information that gets updated with less frequency, maybe by the time it got updated, they already removed it. That is the only fair explanation I can find, apart from start to think that there is some manipulation and maybe the whales pay CryptoQuant to let it pass and not to let people know that they are this time depositing almost $2 billion stupid dollars into exchanges, which will indicate immediately with a red here that we are being dumped on. And I already in this channel told you 3 times, including this one, that I don't know why the red is no longer there, But at 65 in here, when there was the Trump pump, I was also telling you we are in the red once again. So we were informed 4 times in a row. And if we don't get this thing to spike tonight, it will be really unfair if this dumps and it doesn't confirm the distribution. Quite frustrating, but keep your eyes wide open on what's going on at the moment. Indeed, that is not the only dodgy thing that we have had in October, starting with this distribution of $122 million selling wall, pretty much the largest in 3 years, apart from the one we have early 2024 that never got executed. Right now, the wall is 90 million, which is still very significant, but now is located at 73.3. All right, enough moaning, and let's go into the 4 hour and let's see how we prepare the week. First things first, we closed the CME price at 69.6. That is right above the support that previously was resistance. These are prices from CME that are typically more expensive than the prices on the actual exchanges. We reverted all the move up, and this is screaming just by looking at this, ignoring all the other data I'm going to show you later in the video. Just by looking at that, this looks and screams for an ABC correction, because you dump heavy, you just went up, you saw rejection in here, and we come back and you put a lower low already. So that is why I had that bias that this is ready, ripe for hitting 67, 68, which is where we had that chunk of liquidity coming from the CME gap from the previous weekend. And it could actually go slightly lower than that. But I say at the very least 67 hit in there. That is the first bias towards the downside. Let's see what else we got on the table. We got this MACD bearish cross at the top of the range once again. We had one in the 25th of October that we could say didn't play out as the ones before in the past 8 months. Each and every one in here dumped. Here there is an exception. It went sideways, slightly higher there, not even a higher high, but just it did a high before dumping. We had a dump in here, dump there, another one here. And this one just pretty much went back to where it came from and it started pumping once again, this time 200s away from the all-time high. From there, we're seeing the first rejection. We admit that it's difficult to break a previous all-time high. So we're coming back in here and we are preparing the bearish cross. Do we have a cross at the moment I'm recording the video? Nope. Look at the MACD. If I zoom out and you look at these numbers in here, the top is at 1717 and the bottom is 1702. So there is no cross yet. If the price probably goes to 68.5, I will say this cross plays out, but it needs to happen before the closing price. At the time I'm recording the video, there's still 6 hours, 20 minutes to confirm. In my opinion, even if we don't cross by tomorrow, we just need a very tiny move to confirm it. So it's either today or tomorrow, unless over the weekend you had a huge pump in Bitcoin, which I don't think is the case. So if that pump came, it's more likely to come at the beginning of Monday. That's where typically you see the volume coming back into the market. But at that time, it's 2 candles after here. So preventing the direction of this MACD for the impact, it is almost unavoidable, guys. And I'm happy to be wrong, of course, just be aware of that. So coming back into the 4-hour time frame, we can see that we seem to be forming in here a move slightly bullish. Why? Because we have a low, we have hidden bullish divergence formed from this end to that end. After that, we are putting higher high and higher low. Is it impulsive? No, but it seems to be forming some sort of bottom information, like the typical play that you do around here right before you revert back to the upside. And we are very close to that resistance at 47 formed by this trend line in there. Then we have the 52 resistance, that is the global breakout resistance. So if we break from here, then we have a global breakout. The one in here at 48 is just a local breakout, which has a span up until 52, 53. Now, if the CME was to be the one that wins, the odds for the move to the downside, at that price at 36, the support at the moment is 68.6. So breaking the support is necessary to hit the CME gap. And unless we do it in a snap in just 1 or 2 hours with a very quick move down and we come back above the support, I don't see how we can do that without breaking this global support on the 4 hour. And doing that is pretty much everything that we need to complete the ABC move to the downside and getting into 66 point something K. That's why I have at the moment this conflict between these two arguments. And we're going to continue looking at more elements. Hopefully by today we have an answer. But if we don't trade it. We just look at it and we say we have pretty much a situation of a 50-50 with no clear, obvious, evident bias. You keep your money in your pocket. You just don't throw it. This is not betting. You have to have an edge. You have to have a clear idea of what has the highest chances to win. And then if you're wrong, it's fine, because having that edge continuously and we have to be very strict and disciplined. That is the only way that we can keep our wins more frequent than our losses. I think we need to let now the 4 hour give us the bias. We need to wait until the 4 hour makes a decision. This area within this polygon in here is an area of no trade, no decision yet. We need to break some glasses. We need to break something to decide. At the moment, this looks like a bearish flag. There is a bias towards the ABC correction, but if the RSI decides to pinch 50 and close above it, we have to make a U-turn and we have to go in the direction where the events are taking us. That, together with also a flip in the liquidity pools and other aspects we are going to look into later, can perfectly make me change my mind. And one of the things that I'm very disappointed is that sometimes people watch the video on Saturday and I'm bearish. And then on Sunday, I look at some additional elements that are shifting. I make you guys aware that we need to take a different approach and we go for that second approach. And by Tuesday, we say, we did it, okay? We never married one or the other. We just went for the one that we saw progressing with more likelihood towards certain outcome. And then we say, we nail it. And then people write in the comments, yeah, but I watched your video on Saturday and you were very bearish. And I think that is disappointing because I really, guys, want you to follow me on this on every step of the way. But I understand you cannot watch all the videos and fully be inside my head. I try to make the best to transmit everything and make it very transparent and honest, but well, sometimes it's impossible. So from Thursday, we're talking about hitting 70 and 69 on the daily time frame. That's where we are. We are holding this high in there. I say that if we did that, and I talk about that when we were still above 72, that we shouldn't even get offended to hit 69, because that is what price does even in an uptrend. This is an uptrend. Low, high, low, high, low, high, low. And on the RSI daily, to maintain that uptrend, we need to hold the RSI 50, because that will just continue to be a move within a channel to the upside, hitting every extreme every now and then and continuing going up. So we can afford to go to RSI 50 on the daily, and that is located at 67.4. So according to the daily, opposite to the 4 hour that says you break this support and we kind of break the structure of the 4 hour. But the daily says something different. The daily says if we hold 67, we're still in an uptrend. We haven't even broken the low of the 25th of October, which was 66.5. And we are still considered as retesting the breakout from the top of the highs of the megaphone pattern. So coming there is still once again coming into the scene of the crime. Remember that this time that we broke out, we came back inside. So in theory, this breakout going into almost all-time high still can afford for the first time to hit the top of the megaphone pattern and hold it. This one was a failure. Hopefully this one holds. There is a war there. We talked weeks ago that the best scenario that we can have is to continue a huge battle in this area, not going anywhere lower, but just sticking to there for long, keeping those shorts in the highest stress possible. Because all these times we just dump. But if in this area we hold and we stay there, that is what is needed to punish those people. And the long-term holders are just going sideways. There is no more selling from them. And the megaphone pattern on the weekly looks like it came from for a retest. We had a huge move up that could have become that huge green candle that mimics this arrow. Unfortunately, now it's still in the green so far. We have 1 day until tomorrow to close it. But if we close it like this, even though it's green, is similar to one of these dudes in here. You know, it's a green candle with a wick to the upside, meaning that it's trapping longs. It's bearish, of course not as bearish as a red engulfing candle, but who knows what comes after. So we need hopefully to push slightly higher for that close, but I think we are gonna have to stay and live with this particular candle because we are on a weekend and we have to balance out things. If we start pumping now, we're gonna produce a pump on the weekend, which is a double-edged sword, so not great either. I'll cover the RSIs weekly tomorrow in the video that is coming in CoinBureau Trading, along with a bunch of other things that are important to cover at the end of the week. Let's look now at the evolving moves on the scalping chart on liquidity pools. What are we looking for? We are seeing a sideways price action. We are seeing a big wick to the upside. We are looking for arguments for the price to do a similar wick in here to the downside. Not necessarily with our coming back to where it came from, but the point is how much liquidity there is here, how much there is here. For a low volume weekend, potentially a move somewhere in there. And we can see that stop losses from longs are starting to pile up in here, but we also have some fair ones coming at 73.3. This is a scalping chart, 15 minutes. So all this liquidity is very fresh as opposed to the next chart that we're gonna look into 4 hour that tracks a lot older liquidity. So let's focus on the most recent scalping liquidity and let's start comparing how heavy things are getting. And my concern is that the price is very close to this, from 68.8 to 67.290, and that is the CME gap. So pretty annoying. One thing that will be really cool and actually beneficial for the longs is if over the weekend we dump to 66. We take care of business with that CME gap and we open on Monday CME with a price lower than the closing price of CME, which I think we said it was 69.6. That is price on CME, but let's go. That should be somewhere like 69.1 or 0.2 on a normal exchange. CME is more expensive. So we close roughly at 69 and we dump to 66 over the weekend. We take care of the CME gap and we call it, okay, it's gone. Then when we open on Monday, we have the gap, the same gap located from here all the way to wherever we open on Monday. And that gap now is above the price. So we are here with the price. Now we have to go back there to take the newly formed CME gap over this weekend, and at that point hopefully there are no longer more business to do in this area, so we don't form in here resistance, because this at the moment is support. So hopefully we take care of business in here, we get the insurance to come back there at 69.7 and we break above and we continue. If we see rejection there, then it's not as a great plan as I initially thought it will be. So liquidity says and supports the idea of going for the CME gap. 69.6 to 71.5, there's pretty much nothing there. There is a bit in here, but is nothing compared to what we have below the price. Price needs to move back to 73.3, 73.1, 73.7 in order to hit hard the shorts. We have a little bit at 72.1 that just started appearing today at 2 p.m. in UK time. Let's look at the longer term liquidity. We have 65K and we have a bit in here overlapping the CME gap. If we zoom out, we have the 61 there. Let's leave the top out of the exercise, and 60s continues to be heavy. Now bringing back in the levels that are above the price from the long term, you can see how they start immediately becoming like nothing. Eventually they even disappear from the normalization of the chart because the top is way heavier. So I think it will be really weird to see the price really collapsing into 46K now, which is an motivation so far from the price. Only a black swan event can make this move with no incentive in between, at the same time being less than what we have immediately above us. That is kind of the logic of this. Probabilities say up. That is the incentive. Now they have to manipulate the market. They have to cause something big really to go in the opposite direction. But I hate to say it, but it is also possible to go in the opposite direction. And the people that move these things, they do have that button to do anything they want. Let's turn the page and let's say something more positive. The longs and shorts, the delta has reset. We are back into the bottom of the range. That is beautiful because so far we have respected this trend line when there is too little amount of longs and excessive amount of shorts. The last time we look at this, we talk about it as an alpha. We waited for confirmation. At that point, the price was at 66.9 and we were on a weekend and we were talking about taking a long. And I remember no one talking in here about long in Bitcoin. Indeed, everybody was already getting quite bearish, including me on Saturday about the rolling over of the price action of 4 hour. But it was this together in confluence with a bunch of other elements, primarily the 4 hour RSI time frame, that allow us to do the perfect sniper entry in there for a 15% to the upside. So we are going to start taking in consideration this is going against the other guy, but we are getting in an area of extreme shorts as well. And that is going to also appear in some of the next charts. And I'm talking about the delta on high block capital. We got at the moment 334, which is less than the 400 that we had in green when we were here at the highs. So this is calling again for excessive shorts. This is going against my idea of breaking the RSI 4 hour in here. So we have that CME gap and we need to start thinking potentially we're not gonna break below. So once again, this is not a video of it can go high or it can go low. This is a video of let's prepare what are the signs to make the decision once we have enough information to make the best decision that we can. And with the RSI in here, we still cannot decide. We have liquidations below, we have the CME below, but we have a delta that is saying that we are about to bottom. So if the RSI 4 hour starts sneaking into a breakout to the upside, we need to take that in consideration. And I think that RSI, I let it be the final decision together with the bias if it's a strong one. Guys, if you want to trade with liquidity pools, there's only 4 days to get these discounts on Trading Different. But that's not the end of it. If you use the link in the description of Trading Different, my referral link, you get 15% on top of this already huge discount from Cyber Monday. If you didn't watch my video from yesterday, it was a 30-minute video. You can skip the part of the TA, of the daily swing trading, and just focus on the CPR monthly. Do not go into November without knowing what CPR says, because it's usually saying the correct thing. Also, don't miss the Fibonacci show. I covered this and this one, both of them giving us very important information. And as I promised for today, I was going to cover an indicator called CBBI that I said this indicator has never been wrong. Never, ever. And it's an aggregated indicator, not just like RSI, but it's piling up loads of indicators technical ones and on-chain data as well. Just type on Google CBBI followed by maybe Bitcoin, and you're gonna find this page. Indeed, this is not an indicator. It's like an index of indicator. It's using all these indicators that you can see listed down below, starting with the Pi cycle top indicator, which is a combination of moving averages, the Rupel, Nupel, Rodel, Pule multiple, 2-year moving average, Bitcoin, Trololo, trend line, I have no clue what was that, I don't remember, MVRVZ score, reserve risk, Woo, Bull, top cap versus CBDD. I mean, lots of acronyms. I know pretty much half of them by heart, and the rest, I think I studied them at some point and I don't remember. The point is the performance and the fact that you can even ignore some of them and see how that affects the index. At the moment, they are all selected in the website, but you could, if you wanted, just focus on one of them and see how it looks like. For example, reserve risk. In here, you're going to see now just the reserve risk. But if you toggle all metrics, then you get kind of an average of all of them. They are normalized and they are integrated into a single index. Pretty cool. Let's see how it has performed throughout all these years, starting from 2011. And you can see that bottoms of the market print a CBBI below 10. Many times we get to 2. The past bear market, I remember looking at the confidence of this being in 3, in 2. And at the same time, I was doing TA and I was thinking, I'm just going to buy quite a few Bitcoins and just let it ride. It has never been wrong. And I did that. The problem is that I sold too early and I started doing my thing, which is swing trading. As I started seeing risk around here, I was already selling, then buying less than what I had. I mean, I should have just held the Bitcoin and used it as collateral to do my trading thing. But point is, it was extremely accurate. It was just a few days away from the actual bottom, just hundreds of dollars away. And the top in here at 98, Bitcoin didn't top there. It topped $4,000 higher in the next top. That time with a CBBI confidence of 80. But if you sell above 95 in each and every cycle and you buy below 5, you never miss the bottom and you never miss one of the best tops, not the actual top. And where are we now? We are at 69. We've been hovering 63 to 65 in the past months. I've been monitoring this. I actually follow CBBI on Twitter, so every day I get the reading. And hopefully this cycle as well, the top is going to be very close to readings of 98, 99, or in here 100, and in here again 99. And as long as this continues to work, it provides pretty much a stress-free approach to holding Bitcoin. And think about it, you could have bought Bitcoin at the beginning. Of course, I wasn't thinking about Bitcoin that year. I started a little bit later. And I lost some Bitcoin as well. Yes, I'm one of those. Imagine buying in here, hedging at 99, closing your hedge position at 1, but still holding that Bitcoin. Well, you could make a lot more than just holding, which is already mind-blowing. Anyways, I leave you to it. Have a look at the indicator. It's free, it's on Twitter, it's everywhere. And all they ask is for donations, which they accept with different wallets. Guys, if you want to trade Bitcoin, altcoins, or anything, I do recommend Bybit as an exchange. I use it extensively for trading with bots and manual trading as well. It connects with 3Commas, for example, Gainium, and many other bot platforms. If you use my link in the description, you can claim up to 30,000 in rewards subject to trading volume and have the lowest fees to trade, which really help, particularly when trading with bots that trade very frequently. If you want a hassle-free exchange, no need for KYC and no need for VPN anywhere you live in the world, then have a look at Bluffing. I already have 2 accounts with this exchange and it took me 5 minutes to open it. Deposit and start trading with leverage immediately with all coins, Bitcoin, Ethereum, everything and I managed to negotiate a bonus of $10,000 and the lowest fees once again. Have a look at the description. If you already have an exchange and you still want to support the channel, don't miss the discounts, bonuses, lower fees that you can find with my top 20 products in all crypto space. And remember, tomorrow my video is not on the trading parrot, it's on Coin Bureau trading. I'll see you tomorrow. Bye bye.